there's a lot of other opportunities that's not really being talked about like that. And I want to at least introduce you guys to some of those opportunities or talk about some of the things that you may not know about. Um, so I put some slides together, but someone asked me a question. I just had to bring it up. Um, one of the opportunities that we've been talking about, it and everything I'll speak about after this could actually fall under this category, or you could pivot and go different ways with that. Um, so one of those opportunities is being a private money lender. If you have access to if you have access to funds, which I'm gonna talk about the access that you may have to these funds in a moment, but if you have access to funds, then you can actually become a private money lender. Why would you want to become a private money lender? Let's say you have money sitting in your retirement, right? And in that retirement, you'll probably make, let's say, 3% per year. And someone comes to you and says, "Hey, I'm looking to do a deal with this property." Of course, make sure you vet them if you don't already know them, and go through that whole process. But someone comes to you and they'll say, "Hey, I want to do a deal." They show you the numbers, and let's say, I'm able to give you 10% back on your money in 6 months. If it's sitting in your retirement, right, and you're able to make 10% off of your money from working versus it's just sitting there in 6 months versus 3% in 12 months, why not? Because now if that person needs to do it again, hey, there's a chance you can make 20% off your money instead of um, just that 3%. Here's the other part. When you become a private money lender in the real estate sector, that means that you could be a private money lender for a fix and flip, a commercial project, or a buy and hold project. Why would you do something like that? In a fix and flip project, once that project is over, now they're able to pay you back the money that they borrow from you plus the 10% or whatever you guys negotiated for to be the return on your investment. If you're looking at the commercial, right, from the commercial perspective, and someone has money into, let's say, an apartment building, and you have your money sitting in that apartment building. Now you've just created a opportunity to have passive money coming in on a monthly, quarterly, or yearly basis because your money is sitting in a hard asset. Or if you're looking at buy and hold, meaning you have a residential landlord who's buying single properties or maybe four units or less in a property. If you're looking at it from that perspective, that particular investor is able to purchase the property and fix the property if it needs repair, and then in most cases they're going to refinance to because they're fixing it at market value. Now they're going to refinance to pull the equity out of that property. If you're the private money investor, what happens is you're using your money to either help with the rehab or help with the acquisition or even both, and then they go to refinance, pay your money back plus your return on investment. So that's one opportunity that we have right now. Now, how can we do that? As I explained before, right now, because of the CARES Act, if you have money in your 401k, your 403b, or even your IRA, normally what happens is if you pull that money out before you're about 59 and a half or that reach that certain age, if you pull your money out before that, you're actually charged a penalty, and it's normally around 10%, right? Right now, because of the CARES Act, if you there are allowing you to pull out 100,000 or less and you can pull out 100% of your money up to 100,000 with no penalty. So now if you're worried about your retirement, your 401k, or this is the opportunity for you to actually get into some of these other investments or grow your money in a way. And of course, you can put it back. So versus when I have conversations with certain buyers, certain investors, and we talk about the option of 401k, 403bs, and things like that. The the first thing they say is, "But what about the penalty? There is no penalty, and you're able to do this through 2020." And then what's happening is the tax implications. They're allowing you to pay those taxes back over a 3-year period. Now, the other parts of that, as I was explaining to another caller who had called in, the other part, there's two different ways that you could do that. You can just pull the money out, and that will be considered as income. That's why they're taxing you on the money. Or you could actually do a 4K four. Oh, I can't get my words out. A 401k loan is what I'm trying to say. And the difference between you pulling out your money out your 401k and actually using it as a loan, the difference between that is if you just pull the money out, you're pulling your own money out, so you're not required to pay that back. However, and that's why you're able to get taxed on it, because now they would consider that as income. However, you're not taxed on loans. So if you're doing a 401k loan and you are required to pay that back, but you're not going to be taxed on it unless you don't pay it back within the 5-year period that they're giving you. And at that moment, and once that happens, then you'll be taxed on that amount. Um, so some of the, like I said, these are just some of the opportunities that this situation is that we have right now in COVID-19. Um, I actually I spoke with a I spoke with one of my lenders, and it was Eric Stewart, and we spoke on what's today? Today is Friday, so we spoke on Monday. Gotta get my days right, right? So we spoke on Monday, and what he told me was his company at some point soon they're gonna bring back the no doc or low doc loans. Why why did people get excited? My phone, people start texting me. They started calling me, Cory, how can I get down? And why is that so special? I'm gonna tell you why. Normally, what happens is when you purchase a home, there's certain information that the bank needs to have. Your income, your employment, just all of these different documents that the um, the lender needs to have. And what happens is sometimes we don't always have our documents together, especially for my self-employed buyers, my self-employed investors. A lot of times our documentation is not all that great. And now we have to go through other ways to obtain properties. Now you have this no this no or low doc loan opportunity that's coming back. And the credit, all you're looking at that point is your credit requirement. And he's not sure what the credit requirement is going to be. But before, when they had that credit requirement, it was about 640. He's not sure if it's going to be raised to 680, but right now it was at 640 before. Um, now now you're able to purchase a home a little easier with something like that. Now there are some people who are a little worried about that because that was part of those loans were the contributed to the crash in 2008 and things like that. But I would advise make sure you do all your homework on these particular loans or these particular opportunities because of the fact that I just want you to be successful as successful as you can. So make sure that's something that could work for you. Make sure you have all the details. Um, one of the last things I am going to talk about, which a lot of people don't really talk about, or let alone a lot of people don't really know. you actually check your life insurance policies. I'm going to say that again. Check your life insurance policies. Why? Because some of your life insurance policies, you're actually able to borrow against your life insurance policies, right? There's actually a an SBA loan product now called 7A Express. And with that 7A Express, they're allowing you to use your life insurance policy as collateral in order to get an SBA loan. A lot of people are talking about the PPP, but not many people are talking about the 7A Express. In addition to that, you can borrow against your life insurance policy, and your life insurance policy can be your personal bank because they don't have the same requirements. Um, so, what are the takeaways in in dealing with your life insurance policy? Right, the restrictions you do have some restrictions, but the restrictions aren't the same as when you're dealing with the bank. We're not talking about your credit. We're not talking about is you have to specifically do something like for specifically use the money for, let's say, college. And if you don't use it for college, here's the penalty. No, if you have enough, and then you can actually buy a business, buy whatever you want, which means that you can also take that and invest in real estate. You can also become your own bank. There are some hard money lenders who are actually lending their money, and some of that there is coming out of their life insurance policies. Um, so and what happens is if you have a if you have a whole life or a universal life, they build equity into those policies, and and it builds a cash value, and that's why you're able to loan or borrow against those life insurance policies. So that's another way that you can actually be a cash buyer and invest in real estate, especially during this time. Um, and another thing that I didn't put up there, I thought I did, but another option is using unsecured lines of credit. There are companies and banks out there that's actually that's actually giving unsecured lines of credit. I have a friend in Chicago, and he does a lot of creative lending, and he has relationships with different banks, and they're able to get anywhere between 150 up to $350,000 in unsecured lines of credit. And what is an unsecured line of credit? An unsecured line of credit is something that's not backed by any type of collateral. For instance, many of us have credit cards in our pockets, and we didn't put any money down in order to get this credit card. They just approved us for our credit card. That's an unsecured line. That's an unsecured line of credit versus a secured line where they say, well, put this $300 here, and then um, put this $300 here, and this is how you can obtain your credit or obtain that particular line. Um, so there are there are some of the things that I wanted to make sure that you guys knew that you had advantage of or to take advantage of to do research to make sure that in this particular climate that we're in, we can win.